The market recently entered into correction territory. What's that mean? And what should you be doing about it? I got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so last week, the S&P 500, the stock market, U.S. stock market, entered correction territory for the first time in 2 years since the spring of 2020 with the economic shutdown and all of that. Number one, what's that mean? So a correction is a fancy stock market term for when the stock market drops 10% from a high point to a low point, okay? So a 10% drop is considered a correction. We got really close at the end of January. We got to a 9.9% drop, but didn't get to 10. And we got really close last, October, I believe, as well. And so we've been close, but this is the first time we've entered actual correction territory since 2020. And so this is right on time, right? Not that anyone set their watch to it, but these drops of 10% or more typically occur every 15 to 18 months, something like that. So this was expected. Plus with the volatility, we've had very high valuations. The Fed's been very accommodating, and now they're going to start tightening, or at least they're positioning themselves that way. And then you add in the conflict with Russia and Ukraine, and of course, we've got extra volatility, and we've hit that 10% drop mark. 45% of the time, this 10% drop goes on to be a 15% drop, so there's a 50-50 chance of that, depending on when you're consuming that. We might have already hit it, we might have escaped it completely. But here's the real stat that you need to know, and that is, on average, the stock market is up 1 year later. 90% of the time, okay, the stock market is up 1 year later, okay? So that's good news. And then on average, how much is it up? If it's up during those 90% of the times, on average, it's up 25%. So a correction is nothing to be feared for you investors out there. This is a normal part of the experience as an investor, but it does spook people out, especially when we've got the Fed talking about tightening and we've got some possibility for a war. So what should you be doing about it? I told you before, there's three types of investors out there. I would categorize people into three different types. You've got traders who are very comfortable trading frequently, maybe even day trading, but very often. You've got investors, which would be more buy and hold for the long term. And then you've got savers, folks that are not comfortable investing a lot of money or with the stock market, prefer things nice, slow, and steady. So let me tell you what each of you should do depending on what category you're in. Now, I myself am an investor, and most people that we serve are investors, and that's what I would encourage for you as well, that long-term investor, okay? Why? Because it requires a lot of attention and a honed strategy and a big risk tolerance to be a trader, okay? And most people can't save their way to achieve all their financial goals. So that's why I would hope most of you are an investor. And if you're an investor, a long-term investor right now, what should you be doing? Consider buying. Consider buying. Okay, so number one, I would tell you, make sure that you look at your overall financial plan and make sure that you don't have any long-term money sitting in short-term investments, okay? Long-term money sitting in short-term investments. If that's you, then I'd consider right now deploying some of those dollars into the market. Why? Because I think this is the low point and it won't go any lower? No, I don't think that. I do think that based on statistics, that 90% of the time the market's up a year later, and on average it's up 25%. This could be a great entry point, and if you're a long-term investor, you don't need to time it perfectly. In fact, the statistics would say it's impossible to do that. So if you can buy things a little bit on sale that you're not gonna touch for 20, 30 years from now, fantastic. So the first thing you need to do is take a look and say, what's my overall allocation for my financial plan, for the goals I'm trying to achieve? Do I have some long-term money that's actually sitting in short-term instruments? Do I? And have I made some contributions that are just sitting in cash? Have I been a little bit nervous lately because I've expected a pullback and I've got some long-term money that's sitting in bonds or lower risk? Or do you say, I've been needing to make that Roth IRA contribution and I've been waiting for the right time. Now might be that time for you as a long-term investor. Make sure you're not taking too much risk, make sure you're not taking too little risk, but that's what I would recommend to you long-term investors. The other thing that I would tell you is you're probably automatically saving a dollar cost average, what they call it, every single paycheck or every month, something like that. Continue to do that. This volatility should be your friend in that environment because, again, you're saving, you're investing for the long term. And then finally, to you investors that are near retirement or at retirement, I would hone in on that first recommendation of update your financial plan, make sure that you're taking the right level of risk, make sure that your overall risk tolerance is consistent with your financial plan. If you're on the cusp of retirement or in retirement, I would make sure that you've got adequate amount of short-term dollars so that if this correction turns into a bear market, which is a 20% drop or more, that you're not having to sell at those low points just to get the cash you need because you're in retirement or at the cusp of retirement. Work with your CFP. They can help you with all that. Now, for you traders out there, you better be using a defined and proven trading strategy. This correction should not scare you at all. You should have a system that you're following, that you're working. You're looking for certain things to be triggered, technical analysis or otherwise, that encourages you or prompts you to take action. Okay, you should be following a defined strategy. Don't let this correction whipsaw you at all. Okay, from what I'm seeing with technical analysis, it looks like this could be oversold. Okay, but I also know there's no momentum. So depending on which trading strategy you're using, you might say, well, there's no momentum, so I'm not really active in this market. Or you might say, well, I'm a contrarian, this is oversold, so this is an entry point for me. Regardless, you traders, likely not many of you following this channel because there's plenty of other channels out there about day trading strategies, but the point that I would tell you, if you're a trader, is to be sure you're following a strategy. Why am I belaboring that point? Because sometimes investors have identity crisis. You hear something from someone, you read an article, you hear about someone telling you they made all this money trading, and so long-term investors start trying to trade a little bit, but they don't have a proven strategy for doing so. And so these sorts of corrections sort of cleanse that, okay? So if you're a long-term investor dabbling in some trading, find a good strategy, otherwise convert back to a long-term investor. And then finally, to you savers, you're not comfortable investing, and maybe you've worked with your CFP where you've got a lot in low risk, but you've got some that's in the stock market because it's gonna help you reach your financial goals. The message to you is don't panic. Don't panic. Is it possible that this 10% correction could continue to 15, 20, or even worse? It absolutely is. Historically, though, that's not the trend. Will it happen? Yes. A bear market or a drop of even 30%, that is a normal part of the experience investing in the stock market. It is. However, the odds are most corrections don't turn out to be bear markets, and and usually those bear markets align with recessions, all right? And so there's so much demand in the economy, who knows, but it's unlikely that we're gonna be entering a recession. But don't panic for you savers. Make sure that you're taking the right level of risk for your situation. And if you're uncomfortable with investing right now, work with your CFP on hedge strategies or other adjustments, momentum strategies, something like that you can implement to make sure that you're taking the right level of risk for your situation and that you're not getting yourself in a situation where you could take the wrong action at the wrong time. Meaning, if this 10% drop goes down to 20, and then you say, okay, my few percent that's in the stock market, pull it out completely. That's what you want to avoid. So don't panic right now. Work with your CFP. Make sure you've got the right strategies and the right risk tolerance. We'll see. To me, I've been telling you on this channel for a long time. I'm worried about valuations, especially as the Fed starts to tighten, and then we add a little volatility here with the Russia and Ukraine. We'll see where that goes. On top of all that, with midterms this year, lots of volatility likely coming. Who knows? We will see. Stay in your lane. Make sure if you're a long-term investor, be a long-term investor. If you're a trader, make sure you've got a great strategy. If you're a saver, stay in your lane. Don't have identity crisis. Stay low risk and only use the stocks in the right proportion for your situation. Your CFP that's doing comprehensive financial planning is aware of that and is helping you stick to your strategy, but make sure that's consistent with all 6 areas of your financial life. So work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, korhorn.com. That's Korhorn with a K. wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.